guys, and glad to have you on board again today. We're going to talk about this session that happened in the cryptocurrencies. Definitely a lot of psychological behavior out there, lots of liquidation. But we're going to talk about that, of course. But before going any way further, I would like to point out one very concerning stuff that I've been coming across social medias and whatever, influencers, YouTubers. I somehow felt like a lot of people were seriously lacking of empathy, and that is something I would just point out as an introduction. Well, sure thing, for most of us, this day has been just a shocking day in a way that we certainly weren't expecting it. Probably you took some stop losses, I did, which means not a pleasant day, but not a so bad day either. I mean, we somehow recovered prices to where we were before. So it's not really that big, but it is changing some things. But most importantly, I've seen some people like going into some stupid usual psychological behaviors. So this is either fight, flight, or denial. Simply, denying the fact that something big happened and, well, we just recovered, so let's move on to the next thing. No, certainly not. Things have changed and you cannot ignore it. On the second hand, like I said, I've seen some people boasting for their massive gains because that was hell of a lifetime opportunity to gasp into cryptocurrencies at such cheaper prices. Well, first of all, okay, sure thing. Making some nice trades is something. Forgetting about the fact that some people lost $10 billion cumulated is another. So today I'm not going to celebrate. I did get some calls, but very limited ones. I never expected prices to go that low. I thought we would eventually go dive beyond 41K. But the thing is that actually I never thought it would happen now. So I've been surprised like many people did. It wasn't technically probable, but still it occurred. So let me just talk about that today, okay? We're going to talk about the probabilities to have built a major low point and what can we expect further down the road. But like I said, first of all, let's take a second to think about all of those who just left the crypto market by force, those who've been just liquidated. It is a serious number of people. On the worst of the day, I think I've seen something like 700,000 people liquidated for a total of approximately $10 billion. So putting that into perspective, just aside of these staggering numbers themselves, we can see that this is not the hottest we've ever seen. Actually, the first drop into crypto market liquidated quite some people. So today is eventually even liquidating less people than that. And we're looking at all symbols on all time frames. So basically in here, it's kind of, I would have expected more. I know that can sound pretty stupid, but that's one of the reasons leading me to believe that we might not yet be at the end of it. So the main message I'm sending now is that if you think yesterday has been hell of an opportunity to get fully leveraged because the bull run is going to reactivate out of this dip and so on, well, we're going to see technicals later on. There are many things suggesting we might not be on that verge for a massive bull run to reactivate. We'll see about that. But this is the first element we need to talk about. Liquidation, sure thing, they are staggering numbers. But looking at what we've done in the past and looking at history, I would have expected this dip and this kind of dip to liquidate more people than the one we've had in the first drop coming from all-time highs. So that's the first, okay? Then we move on to another chart, Fear and Greed Index. Of course, Fear and Greed Index has been to the worst possible levels. We've gone right down to 11. These are levels that, if we put into perspective, we've rarely seen into the entire crypto history. We've seen that, of course, during the COVID pandemic and just a few occasional moments in between when we were generally in the middle of the crashing structures, and despite that, some few points after the 2018 crash, of course. So it is what it is, but basically the crypto fear and greed in a bull trend. Of course, some people are questioning the reality of that bull trend to fully be there. I will explain why I think it's still there, but not the way people think it is. But then we need to assess that. in a technical perspective, we are far off the latest lows. So in terms of sentiment, we're experiencing currently a level of fear that hasn't been seen since the COVID crisis. Well, prices are significantly much higher than that. So there is kind of a hidden bullish divergence here in terms of the sentiment being irrationally bearish versus what prices print in front of us. So that's the first element signaling that there is still gains to make. The question is, how do we expose risk on capital to get to these gains? That's what we're going to be talking about today. So let's go to a chart now, and the first things we're going to say is that we're going to stop looking at 1 hour, 4 hour signals, whatever. This means whatever happened the other day is huge volatility on these time frames. It was technically irrelevant to do such a thing, which means if we did it anyway, there's a reason. We're not going to go explaining why, because that would be just, first of all, a waste of time. And let's put it plain simple. It was very low in terms of technical probabilities. So whatever happened, or whatever caused it, to put it that way, I'll just call it chaos. It's just something you must not waste energy upon. It happens. Chaos can hit at any time. And chaotic probabilities, anything that is less than 5% chances to show up, is something you must just ignore. Account as probable still, because nothing has 0% chances to occur. Reason why we always risk limit, and I've always made it real clear with that. If there's even a 1% chance to lose it all, then that's not trading. Trading simply just can't do that. You can only use leverage on safe assets, which weren't the case for cryptocurrencies. We know how volatile they are. They are volatile enough by themselves to provide significant gains. So I still don't understand why people use leveraged position and margin trading on cryptocurrencies. Of course, despite the fact being an intraday trader, where you can of course do it, but that means you're in front of the computer at each and every time, and if things turn ugly, you're going to be able to react. But otherwise, people going into leverage trading just because they want to make more gains in a market that is so volatile all by itself and under huge tension, and we've been mentioning it back then. Well, we were waiting for a daily signal and we still don't have it. So that's the thing we want to talk about, okay? In a global crypto total stuff, well, sure, it's something, but that doesn't necessarily mean it's that big. Let's have a look at a monthly chart though, and you wouldn't even notice this. Probably, I think 1 year from now, possibly 2 years from now, this would be something we'll remember for those who have been severely impacted today. Otherwise, I think this is just one of the candles that can show up inside the bull run. These volatile candles that feel like, well, we want to basically delete them from the price history, like it didn't happen because it made no sense in the overall big picture. So has the big picture changed? I would say no. Look at this monthly chart. We have broken above the resistance and broken above the previous candle. Sure shit, we are breaking the low points as well. Question is, where is going to be the close, the candle close? So I would say, sure, we need to see a weekly candle close first, but we also need to figure out what the monthly candle close is going to look like, because it looks like a candle body bearish engulfing, but it has hell of a lower shadow candle just as well as an upper shadow candle. They generally signal that the market is not going to break that candle by next month. So what's the likeliest outcome in terms of crypto total? Well, first and foremost, and by far, I would say ranging is definitely the most probable outcome now. And when I say ranging, I don't think we're going to range for 1 month. I think we're going to range for much longer than that. Okay? So take it as of what it is. I think that right now we're on the verge to start a pretty boring summer range, and we might eventually try to dip a toe below first, because the candle is not yet closed. We still have 10 days to run, and I still have no bullish signals on the bottom. We're going to say that looking at the Bitcoin. Of course, there's been some significant disparity in terms of response. Some coins have been definitely rebounding quite solidly. Some others are down the dips. Some others recover with a mixed feeling. But the broad market itself is still solid. That's what I would say. So I don't have the luxury to go into each and every individual coin. So we're going to do Bitcoin because that's Bitcoin king, and most importantly because the Bitcoin dominance has made kind of a rebound throughout the latest few days. So we'll see him as our general crypto sentiment, and of course you would like to make your own analysis on each and every one of your personal altcoins in your portfolio. Okay, so the previous scenarios, and I think I am still into this mood, were to look for a daily signal on the bottom. We definitely have cycle alignment and all the things we need to look for a pullback opportunity. We were trading out the 38% Fibonacci, a level that I bought earlier in the morning of this session. And of course, I've been stopped out because no one would have expected that we would drop that low. We were 38% fib, so I anticipated the signal by buying into lower time frames. Total failure, anticipating signals. Of course, I know the risks, and in here it has been a triggered stop loss. Okay, so we had everything. I was just anticipating a potential daily signal. Turns out they took away my stop losses in a straight line. Now here we are testing again this level to see if it acts as a resistance, meaning that we're going to have to spend a bit of a time working around this area, and we're going to study the volume left behind. Okay, just to make it plain simple, we're retracing the bull breakout, which means we have printed stuff left behind. We've retraced down to this thing, which is the highest level of volume that has been printed. There was kind of two levels, okay? So we are now trading until further notice between those two boundaries, okay? So can we expect going below 25K? I don't really think that's a possibility. Can we go above 41K? That's the big question mark we're asking ourselves now. Can we actually recover on top of this level, or have we just sent a message that the market has to trade there first before eventually considering retracing right back above 41K? So this is this big level we care about. Technically speaking, 38% should have been a support, but we've broken and closed below. There is still no daily signal at that point, so in terms of risk limitation, I don't think that's enough to consider that a dip has been made. So actually, what I'm going to say today is something I generally don't want to say to inexperienced traders, and I generally spare that for the most experienced ones. Today, we have to assess something different. Because of course we totally fucked up the context. We're in a bull trend. We're not supposed to break supports. So it's something odd in here is part of the answer. And I would say generally when that's the case, when technical suggests something unusual showed up, the first thing you want to check is volatility. Because actually in here I don't understand why the algorithm hasn't yet detected the volatility patterns in here. Probably just because the algorithm is not perfect. There's some flows in here, and nothing automated can be perfect. But I would say in here, in normal conditions, the algorithm should have detected the huge volatility pattern. Well, it didn't. So that's the reason why I invite you to do it sometimes. When things seem out of the ordinary, switch to Bollinger Band type of stuff, and you'll see what the volatility thinks of it. And most of the time, volatility is part of the answer. So technically speaking, the speculative area definitely, and I stand for what I said previously, was there. This is the area in which we wanted to buy. Still, the market decided to fuck it all up to just go for the volatility boundary. So I don't think that's the end of the world, and volatility boundary all by themselves can sometimes act as a risk limitation. Figuring out that the market just wants to go as far as possible from the actual average prices, which generally signals the fact that this will be probably the mid part of our range, okay, and we just probably have extended that range. And the volatility boundary is just going to act as an volatility limitation entry signal, because generally people don't bet on the market price continuations over 2 standard deviations, which is what you see in here. So the fact that Bitcoin, taking it as a reference, has stopped this sell-off when it reached out to standard deviations, which leads me to believe that even how impactful and psychological this session turned out to be, liquidations, China, whatever reason, people are looking for answers. Jesus, I can't say that enough. It is pointless. It's just a sign of your immaturity. If you're trying to understand why, it just means you're definitely not mature enough to go with trading. It's definitely not what matters. What matters is what do we do next, okay? So can we call for a bottom just because we've touched the volatility boundary? I would say that's a tricky question, and I wouldn't bet on just that. I would like to see a pattern. Volatility limitation, sure shit, might have stopped the intermediate first attempt. There might be other ones, and as we already tested the volatility boundary, if we get back there, then we're going to go lower. Just make it plain simple. Okay? Normally we shouldn't have gone there. Let's make it simple as well in here. We shouldn't even have been there. Still, we are. So we need to account that into our probabilities. All right? So until I get a daily signal confirmed, or eventually a weekly one, and we do not have any as well, I'll wait for candles to close. Do I still think the market is bullish? Yes, but in a monthly state, we have a signal. It is an overbought cluster. Overbought is just a sign of normal things that happens in trends. If we are overbought into the monthly chart, just like we stated with the crypto total, we might just be ranging for a little bit, for a little while, until we actually find the strength to go beyond overbought level. As we see, we already have overloaded the momentum. So when we overload and overbuy, it's generally the sign of a healthy trend going on. We have broken cycle into these time frames as well. These are other signs of a trend. And I can't stress that enough. I definitely think Bitcoin is on the verge for a monthly trend, which means not something that's going to terminate today, definitely not tomorrow, can lead to at least 2023, not even to mention it could go beyond. We have clear evidence of weekly breakouts to be at play. Monthly are still pending. We've reached out to targets, which means this is the validation level for these trends. Ranging in here to hesitate a bit make quite of a sense, but the weekly chart is definitely trending. So monthly asks for more gain. Weekly isn't a mature trend, but it is volatile, and we already had that answer so far. We already had that alert. So whatever happening here definitely has been volatile. But I think that's part of the game. If we want a monthly trend, then we might have to assess that the weekly chart, which is trending, there's a clear evident breakout out there. As long as we maintain prices over 20K, there's not even a chance we can reverse that breakout. Sure, it has been hell of a rocket to the downside this time, and we've really fallen off the cliff, but that's definitely not a closed candle. And to be honest, if the candle were to close the way it is now in 2 days, well, I would definitely be even more bullish. Not immediately, because of course we're going to have to digest that. And I think, as we've seen, looking at the monthly candle, we're probably going to spend some month oscillating in here to recreate the pullback, which is just maturing a range, daily, weekly chart time frames, and then, lucky us, I think later this year we might have and reactivate the bull run. And that perspective would confirm the fact that we're also monthly trending. And monthly trends, like I said, is not going to stop at the end of this year. It's going to keep pushing through 2023. Is it going to be volatile? Yes, it is, but these patterns have a limited time offer. So I tend to say that the early breakouts, and we've actually broken daily, weekly, and possibly monthly, as we stated. This one is still a question mark, but if it's actually true, and I definitely stand for this, I think it is, well, in that perspective, triple time frame breakout occurring at once, and the weekly breakout has been signaled to be volatile. This is what we've experienced this week, volatility. And I think that by now, volatility all by itself is not enough to consider that we've made the dip and that we're going to rapidly go all-time highs. I doubt it, but that doesn't mean we failed on the breakout either. It just means the breakout is volatile, period. Okay? So what happened yesterday is, I think, my personal technical opinion and personal feeling, everything is basically heading into the same direction. It has been volatile, and that was all about it. So whoever was too much leverage in a market, knowing the risks, every professional into this market knew these things could be dangerous. That's the reason why, and I've always made it clear, There are several videos each and every week into TradingView to prove it. I've always told you not to use leverage or very limited one. There is no necessary precautions but to not use leverage into the markets, specifically when the market has volatility alert, and this is weekly fucking volatility. So what happened in here might not be the end of it. And let me be real clear, can we make another attempt next week? I think we can. I probably think that we're going to close this week as of the current prices, but that doesn't mean next week is necessarily going to be bullish. Lower shadow candles in these types of context, I wouldn't be surprised if next week we had another attempt to the downside to make just exactly the same thing. Going low, failing to close, and eventually later on, we'll find the strength to go bullish. Whatever I can say that I think I have reasonable confidence on is the fact that we're not going to leave the current area until a few months. I think we're going to spend at least a couple, not to say probably 1 to 2 quarters, without moving anywhere beyond the all-time highs and possibly shifting below the current low points without going much further down. But do we have a safe bottom now? I have no daily signal, no weekly signals, so I would say don't call that for a top. Don't call that for a bottom. That's a bit too early. So what does that mean in terms of trading opportunity? Well, that means we are into a tricky situation. And if you're not experienced enough, I sincerely suggest you step down for a little bit. You just cool down and wait for the monthly candle close first. That would be the most reasonable thing for you to do, to understand that whatever happens in here requires absolutely tough risk management, exceptionally good psychological management, which, let's be honest, most of you guys simply don't have. So playing and trying to gamble into a riskier context, the one that you can handle, is just putting your capital at risk. And your capital is what is absolutely necessary to get gains. So if you want to make gains, you rather like to think about putting your capital safe rather than putting it at risk. Sure, if you've invested into the crypto market for multiple years, yes, of course, these few days that happened weren't pleasant, but they don't change anything. If you have bought without leverage, well, your keys, your coin. End of the story. Nothing will ever force you to sell, because if you own your coin, there is no margin to margin call. There is no nothing that forces you to sell. And if you were on board for 2 to 3 years, well, we might be just halfway through. And these things can happen. Like we stated, I had multiple alerts suggesting we had to be cautious. Well, today is just proving it right. So that's going to be it for today, okay? Of course, altcoins have suffered much, much more than Bitcoin did, but Daddy is here to tell us that the story isn't over. Of course, if you are loaded with shitcoins, that means you still haven't listened to me. Of course, you just can't listen to me blindly, but let's be honest. Even if you have been margin called, I hate to say that, but I told you so many times. You've made repeatable and repeated mistakes trying to avoid and doing the opposite of what I always suggested you should do. I never forced you to. You only make your own decision and you make your own research. But I've always told you that using leverage would absolutely be dangerous into this market. Not saying that you would die, because I never thought these things could happen myself as well. Yet they did. And those who've made the margin trading mistake, well, if you lost a portion of your capital, well, you just took some risks and they hit you hard. If you lost it all, then you have no other choice but to understand that this is something bigger, okay? If you've lost it all, I'm going to terminate with that. It's not pleasant. I don't like to see this, and I don't like to say that. Means that you are beyond just taking a hard hit. At some point, you've just got traumatized. So this requires some more radical actions. If you've lost it all, you're definitely going to feel one of the worst possible feelings. You're going to go extremely against your amygdala response, which means you're going to fall for either fight, flight, or denial response. So let me be real clear. Fighting this isn't going to change anything. It's just going to make it worse. Flying away from it, well, you've made mistakes. You should account for this. Sure, you have made mistakes. There are no other ways you could have gone margin call. You had repeated warnings not to do something that you kept doing, and you've piled up some risks one on top of another to just terminate being down the corner without any other option but to just be liquidated. And last but not least, denial isn't going to change anything. This is the reality. You've lost the money. So yet there's no other choice right now but to accept that, grieve, go back to work, and eventually if you want to start trading again, you're going to have to rebuild some capital. So go back to work, build up some savings, forget about trading for at least a few months. Stop looking at the charts. No money means no trading, and no trading means certainly you shouldn't have a look at any chart. Otherwise, you'd just be one another of these gamblers, addicted traders that just burns all their money and keep looking at the market to just remember them how they could have been rich without doing it. So let's be smart. Build yourself some capital. Start all over again. I've seen some very successful traders basically margin called on the first years of their trading. So that doesn't mean this is the end for you. That just means if you've made a big mistake down to destroying it all, there's no other choice but to grieve, work again, go back to build a capital, and eventually, if you still want it, start all over again without ever making this mistake again. Okay? I'm sorry to say it's not pleasant, but I know it's the reality for some of you guys. Unlucky for us if that is the lowest of those of you. I think most of you guys just had an unpleasant day just like I did. Sure shit, you probably took some stop losses. I'm not lying, I took some as well, and these days are so rare, so taking stop losses within chaos is just part of the game. I don't make it a big deal. I just know these days are the ones in which you take a stop loss and you don't overthink things. They happen, and these are not representative of whatever happened in the long run for your accounts. Sure, I'm making much more gains than these lost days, and I can't avoid these lost days. They are part of the job. I just call them chaos and move on to the next day. That being said, I hope one day you'll get to have this mindset. It takes a little while to get there, but if I made it, you can as well. It's just a matter of time, and you'll learn to get away from these things without too much of a hurt. That being said, wish you guys a pleasant day. Hopefully it wasn't the worst for you. Hopefully you didn't go into hell. If you did not, and if you survived, well, we still have plenty of things to learn. But anyhow and anyway, if you survived and if you're braced for the volatility, well, we still need to wait for the monthly and weekly candle closes now. So we're not going to do anything until we get Sunday's close. So don't try to speculate. Don't try to gamble. Next week is going to be tricky. I'm going to make a very complicated weekly update into TradingView this weekend. Bye, guys.